Hello everyone, and I welcome you to my video in which I will explain to you the challenges that currently face asset management companies in issuing financial statements with cryptos. I will also present the practical solutions by finance professionals to clear up some challenges in the next video. The feedback from interview partners and the interpretations of the literature, and the financial statements of the public DLT groups were the critical references for finding results for asset management companies. Asset management companies offer active investment funds for both private investors and institutional clients. Asset managers buy and sell digital assets that operate on the blockchain network. Asset managers can offer collective funds that may contain a mixture of digital currencies. In Switzerland, the Federal Corporation has adopted a proactive approach to companies linked to fintech. Switzerland has been amending the existing legal framework to sustain corporations in the DLT. It has applied a distinctive strategy by solely modifying the laws and regulations for innovation and technology. On the 29th of September 2021, the initial crypto fund has been authorized by FINMA, the Swiss Financial Market Supervisory Authority, by Swiss regulations. The fund is exclusively accessible to qualified investors and focuses its investments primarily on crypto assets. In the USA, many traditional and crypto asset managers followed suit after BlackRock's move. Everyone right now is waiting for the U.S. Securities and Exchange Commission, SEC, to approve the new applications. In 2018, FINMA published guidance for companies to classify asset, payment, and utility tokens. In June 2023, the WSJ has announced that the SEC finds the applications inadequate. Fidelity Investments, ARK Investment Management led by Cathie Wood, Invesco, WisdomTree, Bitwise Asset Management, and Valkyrie, all either reactivated or made amendments to their applications for a spot Bitcoin ETF. However, corporations still waiting for the SEC to give its approval and allow asset managers with a worth trillions of US dollars. Nonetheless, the Swiss Code of Obligations, IFRS, and US GAAP have not developed any official accounting standard for entities operating in the DLT sector. Guidance is the only available source for firms. Asset managers are obliged to assess under which accounting item these tokens fall in the existing accounting items. Asset managers only receive guidance with definitions but not examples or names of tokens in the DLT market. However, the diversification of altcoins demonstrates diverse characteristics and obligations towards holders and issuers. Therefore, firms must understand the classification of tokens in DLT funds before deciding on a recognition criterion. Token diversity leads holders to face challenges in assessing these digital assets and mapping them in the financial statements. They face financial statement challenges in recognizing the relevant accounting standards that resemble the diverse characteristics of altcoins. The absence of a regulated accounting standard urges asset managers to rely on their significant judgment for recognizing digital assets in the financial statements. However, the applied accounting policy must be permitted by the financial supervisors to avoid legal issues. In addition, companies offering DLT funds tracking security tokens are required by law to obtain a regulatory license from FINMA and apply all the accounting standards that comply with the license requirements. If the DLT fund tracks any security tokens, then asset managers should apply the securities accounting standard. Asset managers must then classify the portfolio of tokens to apply the relevant regulations and accounting standards. However, asset managers may fully operate with a decentralized platform that limits them from reporting crypto assets on the balance sheet. Therefore, these companies fall into legal issues with the financial supervisors. As we see now how the SEC is filing suits against crypto institutions. In 2018, FINMA published guidance for companies to classify asset, payment, and utility tokens. In December 2022, a month after FTX collapse, the SEC has released guidelines that mandate companies to disclose potential risks associated with cryptocurrencies. However, corporations still hold alternative coins, altcoins, in their business model that may not be listed in the existing guidance. Moreover, the diversification of altcoins demonstrates diverse characteristics and obligations towards holders and issuers. Consequently, asset managers can only depend on their significant judgment to decide on an accounting standard. Later they fall its legal issues with the financial regulators or supervisors. Nevertheless, the Swiss, IFRS, and US GAAP have not developed any official accounting standard for entities operating in the DLT sector. Consequently, the asset manager faces financial statement challenges in recognizing the relevant accounting standards that resemble the diverse characteristics of altcoins. For example, from an accounting perspective, a token linked to a security instrument is different from a token developed as a means of payment like Bitcoin. Nonetheless, companies offering DLT funds tracking security tokens are required by law to obtain a regulatory license from FINMA or the SEC to apply all the accounting standards that comply with the license disclosure requirements. Classifying the basket of tokens is the core element determining whether an asset manager has reporting obligations. DLT players can claim that some tokens do not meet the characteristics of securities or investment contracts under existing rules to avoid full disclosure and taxes. Since FINMA has classified Bitcoin as a payment token or a cryptocurrency, then Bitcoin holders in Switzerland recognize it as a payment token. Auditors must also follow the FINMA guidance to serve DLT clients in the Swiss region. However, some altcoins resemble a token category other than payment tokens. Yet, FINMA and regulators did not publish a list of token examples and specified their appropriate categories. For instance, if BTC is payment and XRP is utility. By referring to the definitions in the guidance, each company will argue a certain classification depending on their significant judgment of tokens. FINMA, AICPA, CIMA, and ExpertSuisse did not even consider guiding companies in mapping these altcoins in the existing accounting standards. Yet, the portfolio of DLT funds may include CBDCs, NFTs, or stablecoins that adhere to the definitions of other standards. In fact, companies may be recognizing tokens in accounting items that do not correspond to the characteristics of these tokens. Therefore, it leads preparers of financial statements to fall under unfaithful representation. On the one hand, there are two possible accounting standards under IFRIC guidance. On the other hand, there are several accounting standards under ExpertSuisse's guidance. Holders become uncertain of which accounting guidance they should follow to recognize the tokens. However, the right decision is the one that reflects a fair view of business conditions. Their significant judgment is going to be assessed by the financial supervisors to confirm compliance with regulations. Thanks for watching. If you found this video helpful, don't forget to hit that like button and subscribe for more in-depth tutorials. Feel free to leave any questions or suggestions in the comments below. Happy learning!